I am hesitant to believe that we would record any lower figures in the area of foreign direct investment, because the issue of security is not new. It has been on the cards for some time. It has been existing for some time. But having said so, the foreign investor is not a philanthropist, it's not a charitable organization. It's there to make profit. And DJ, I ask you, what would be easier if you were a foreign investor? To come in and bring your money into Nigeria and first confront the hurdles of establishing a fresh business in Nigeria, the land acquisition process, the litigation process, the registration process, the issue of expatriate quota, and so on and so forth. The issue of kidnapping and insecurity. If one of your staff is kidnapped and they ask for your whole company as ransom or something. These are the things that have been on the ground for a long time. The multinationals who have been here for some time are used to this and they have found their ways around it. But a completely fresh foreign investor is going to consider whether or not direct foreign investment in the area of the real sector, how much would he get at the end of the year? 5%, possibly less than 10% return on his money. Very unusual if it exceeds 10%. Meanwhile, the foreign investor, I say again, is not a charitable organization. It's looking for the highest profits with minimal risk. And at the same time, simultaneously, the government, the federal government itself, has an appetite for borrowing and is ready to borrow at 12, 13, 14, 15% for what is relatively a risk-free investment. And you know, the less risk an enterprise entails, the less usually the profit. The higher the risk, the higher the profit. But here, in this particular case, we have a situation where there's a low risk and there's a high margin. What would you do as an investor? What would you do? You would naturally go for the riskless, in inverted commas, investment that would yield 10, 12, 13, 14, 15%. In terms of investment flows, foreign direct investment flows into the people coming in to invest is more like the real sector, you know, buying land, setting up a factory, employing people. I don't see that that would increase tenfold or multiple-fold in any manner. But it certainly will not slow down the flow of direct investment to government bills and bonds. That's what I'm saying. Because why? It is very profitable at 12, 13, 14, 15%. The converse of that is to come and do foreign direct investment in the real sector with all the challenges and problems that I've enumerated. At the end of the day, you still may not make 10% profit. Whereas for having a risk-free investment by lending your money. And the interesting thing, of course, is that you find that the people who you say are bringing in this foreign direct investment into the government sector, for government lending and things like that, you would find that invariably they may also have acquired their funds or taken their funds from those banks and merchant banks and finance houses where our own central bank is keeping their reserves for minimal yield, possibly less than 2% yield. So you could borrow abroad from those banks where we have the central bank reserves at 2% or 3%, as the case may be, and then you bring it to Nigeria. In other words, you're re-exporting Nigeria's funds, and then you lend it to the government at 12, 13, 14, 15%. If I was a foreign investor, certainly no, it's no brainer. That's the area it's equally worrisome for me that in spite of the fact that we are in this insecure state, so to speak, the government is still willing to borrow at the rate at which it is borrowing, and even celebrates foreign direct investment into that provides it with funds, the funds that it borrows, because these are very dangerous inflows. Dangerous in the sense that a little instability in the world capital market would trigger a rush out of these funds, because these are not funds that are tied to a warehouse, a factory, machines and things like which cannot be gotten rid of in a jiffy. But if you only, your ties are basically your title to Nigeria's government's treasury bills and bonds, that can be sold at any time. And if you do that, and these people want to take out their money, the stress on the economy could be quite significant and may even send us further into the depths of poverty than we really are at the moment. So for me, the worrying thing is that we are celebrating growth. There's nothing wrong in that. But the instigation or the stimulus that that growth will provide may not necessarily be in our favor because of the nature of insecurity that we have. If we didn't have insecurity, then somebody can say, okay, I'll come in here, I'll put my money here, I'll help to build roads, I'll help to build railways, I'll help to build factories, I'll do petrochemical plants and things like that. Yet the returns might be lower than government bonds, bills and bonds in the short term, but over time, stock, how do I say, valuation and things like that, and would make me better off because I'm in this thing for the long run. But that's not going to be the case if we continue to have this kind of incidents of insecurity, insurgency, whether it's in the Niger Delta, whether it's in Boko Haram, or whatever. But I think the most important thing, important question would be, how do we reduce the amount of people who are offering themselves to serve the whims and caprices of this in Boko Haram or whoever organization they may be? And the answer to that must be found in providing more employment opportunities for Nigerian youths. Unfortunately, this can never be successfully pursued so long as government itself is deliberately ensuring that the real sector cannot access cheap funds because the government itself wants to borrow the funds and keep the funds idle in some cases if the government is struggling to borrow at 12, 13, 14, 15%.